slightly controversial if you're someone who's a total debt freer, but I do actually think that it is a good skill to build, and I do believe that almost 80% of us will need the use of credit at some point in our lives. And when you get that mortgage, when you get that personal loan, you want to make sure that you are getting the best rate possible. Why pay more when you can pay less? In this video, I'm just going to talk about a few things that you can do to help improve your credit score should you ever need to borrow money. And whether we like it or not, the majority of us are going to need the use of a loan of some sort or debt of some sort to make a purchase in our lives. Now, I know most of my debt-free people are probably running away screaming bloody murder, just the idea of it. But, unfortunately, unless you come from a really wealthy background, at some point, most of us will need a loan of some sort to make a purchase, for example, a house. Okay, so what we want to make sure is that when we get to that time, when we get to that point, we get the best deal possible. And what we want to make sure is that we have got a good credit score. Credit scores are essentially a bank's way of seeing, what sort of person you are when it comes to other people's money. Are you responsible with money that they would give you to do whatever it is you need to do with that money? Okay, so that takes us to the very first point, is make sure you are actually visible to credit agencies, to the financial world in terms of your financial spending footprint. Now, I wish it would be the case that they could look at your account and be like, oh, Mumbai, we look at your account and we see you got loads of money in savings, and you hardly spend any money on frivolous things, and you are quite a financially responsible person, therefore we are going to give you a loan. Alas, it does not operate that way. Unfortunately, in the world of lending and borrowing, they need to actually see, what sort of a person you are when it comes to other people's money, and when it comes to actually repaying for services that you are getting. So the very first way to kind of start off is make sure that you actually exist in the world of financial footprint. So the first step into this would probably be just making sure that you have a utility bill in your name or a phone bill in your name, and you always pay those on time. Never have a late payment. Put that on direct debit. Put that on an automated payment that comes out your account at the due date, and make sure that you never ever miss it, because that will have an effect on your credit score. And point number 2 is actually just check what your credit score is. Find out where you're at. Find out, there's that saying, you cannot master what you don't measure. You got to measure first and see where you are to see how much you need to actually improve by. Okay, and the next thing onto this is actually check what information they hold about you. We actually checked our credit score a couple of months ago, and the reason why I checked it was because, well, I actually checked the account in detail. I went in to check my file, which cost me about £12, and they give you like a really detailed breakdown on all the credit agencies and the information they hold about you. And I did this because we were about to remortgage our house, and I always want to make sure that I am getting the absolute best possible rate when I'm remortgaging. And the better the rate, the better your credit score, often the lower the rate that you get, in and among other things. So I checked it, and I found out that actually on one of my accounts, they had me on my old address that we'd moved out of a couple of years ago, and they had me as still staying there. Now, whoever was living there now and all of their activity was actually impacting on my credit score. So I, reported that was inaccurate information and updated it to my current address in this one little place that had it incorrect. And they updated it, and my score went from 980 out of the top that you can get, which is 999. So it went from 980 out of 999 to 998 out of 999, which is a big difference. Just them having the incorrect address in one small place had a massive impact on my credit score. So double check they've got the correct information, and it can have a huge impact. Now my score is actually 999 out of 999, which I actually didn't think was possible, but it turns out it is. So hey, the next thing you want to make sure you are doing is check that you are on the voters roll, check that you are registered to vote. If anyone knows why this helps credit rating, please tell me in the comments, because I actually don't know why this helps, but it does. Just do it. Make sure you're registered to vote in your local area. And, hey, who knows, you might actually end up voting. The next thing you want to make sure that you are doing is, if you do have credit, check what your balance is, check what the maximum amount you can borrow on your credit card is, and compare that with the amount of credit you use every month. Now, why this is important is banks care about credit utilization. Now, what is that? Credit utilization is the percentage of money that you actually used compared to the percentage of money that they have allowed you to use. So let's take an example. If they give you a credit card for £1,000 and you can use up to £1,000 and then pay them back, at whatever payment schedule you want to use, that's okay. But you do not want to be maxing out that card to £1,000. That is seen as bad, because that is a credit utilization of 100%, because you are using 100% of the credit that they have made available to you. Ballpark figure where you actually want to be at is roughly about 30%. Now, I'm of the school of thought that you should always pay your credit card off in full. And if you are that sort of person, you pay your credit card off in full. What I would suggest you do to improve your credit utilization is actually just increase your credit amount. So if the bank gave you £1,000 to use on your card, and you spend £1,000 of that card every month, and you pay that off in full every month, what I recommend you do is just call the credit card company, say, listen, I might want to go over the 1,000 every now and again, or I want to improve my credit utilization. Can you up my amount to, £5,000? And more likely than not, if you've been very responsible with your credit, you've always paid your credit card off in full, they will just up it, over the phone. They'll probably just say, yep, that's fine. It will update in a couple of days. And what that means is, it doesn't mean that you should all of a sudden start spending £5,000. That is not what it means. You still spend the same amount that you spend. You pay off that in full every month, but it has reduced your credit utilization. So when you were using 1,000 out of 1,000, now you are using 1,000 out of 5,000. And that means you now have a credit utilization of about 20%, whereas previously you had a credit utilization of 100%. Now that's an improvement. You always want to make sure that your credit utilization is around the 20 to 30% mark. So now what we actually do is, on my credit card, I could actually use about £15,000. My balance on one of my credit cards is £15,000, and my balance on my other credit card is £5,000. Now, I do not go to town and book holidays and things like that for that amount of money. Absolutely not. But what I do actually use my credit card for is paying, groceries and things like that. So the amount that I actually spend on my credit card is quite high, I would say, in comparison to most. I spend about £1,000, £1,500 a month on my credit card. But that doesn't imprint in a bad way, because my credit utilization is low, because the amount that I spend in comparison to the amount of credit I have available to me is actually very low. And I pay that off in full every month. So, the credit card companies probably don't like that, because ideally they want to make money off people. They like people who pay their money off, minimum payments every month. But, I want to be financially savvy with my finances as well. And, unfortunately, what tends to happen is sometimes people start using credit cards, and then they fall into the habit of only making minimum payments. And then essentially the banks start to make money off you. It happens quite frequently, which is why most banks are more than happy to offer credit, really. So anyway, if you manage to pay it off in full, that's fantastic. That's something you want to sort of be working towards. And the very last thing is just in terms of bank accounts. If you've got, current accounts, checking accounts that you are not making use of, at all, they're just kind of dormant accounts, I would suggest that you close those. Now, these are current accounts, not other credit cards. I'm talking about just bank accounts that are just empty, dormant. You're not doing anything with them. You want to keep your money as efficient and as tight as possible. And I would just close those and just keep open the accounts that you actually use. The reason why I say don't close other credit card accounts is because, an additional credit card will help your credit utilization. Why? Because let's say you have an £1,000 credit card on one instance and another £1,000 credit card. That whole idea of credit utilization, if the total amount of credit you have available is high, but the amount of credit you use is low, that is actually a good thing. So I would just leave that if you've got it open, because it just means that you've got credit available that you are not using. I personally believe that credit is a very useful thing. Now, I know all of my debt-free people are screaming at me, absolutely not, if they've not already turned me off by now. But I personally think leverage is a really fantastic tool. Once you use it with wisdom, and once you are a good steward of other people's money. You pay them back that money, and then you use it to help you achieve the things that you are also trying to achieve in your life. Slightly controversial if you're someone who's a total debt-freer, but I do actually think that it is a good skill to build, and I do believe that almost 80% of us will need the use of credit at some point in our lives. And when you get that mortgage, when you get that personal loan, you want to make sure that you are getting the best rate possible. Why pay more when you can pay less? That's my theory anyway. So hopefully you found that useful. I'm Bombay from The Inspired Baobab. I love talking about all things money and money mindset and just, wealth mindset. So if you're interested in any of those things, please subscribe, and I shall see you on my next video. Bye.